Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and on December 30th, I showed you all this graphic and said to buy gold and silver before April 2024 because we were at the start of an economic downturn that would push the prices of both gold and silver up after that point. And for those of you who missed that video, these are the targets I gave and what I said about higher prices out to 2026. I am expecting this to boost gold and silver to the following price levels in 2024. And for those of you expecting higher, just remember, higher prices than these are on the way, but it will take time. And it's why in many of my videos since 2021, I have been speaking about a timeline out to 2026. Now, we got our breakouts in April as I was expecting to see, with gold really starting to break resistance in March, so just a bit earlier than my expectation, to be perfectly honest. And those price targets that I gave in the December video are looking pretty good today, with gold sitting just below $2,400 an ounce, and silver, which was well above the $30 an ounce level just a couple weeks ago, now around $28 after a solid 9.3% pullback over the past 3 weeks. And although it is good to revisit predictions every so often to establish credibility or just discuss what may have changed in the market that caused a prediction to be incorrect, this is not an I told you so video. That's just not what I'm doing here, because there were catalysts, things I was expecting to happen in late 2023 that directly influenced the prices of both gold and silver that haven't happened yet, namely a significant drop in the US dollar relative to other foreign currencies. So in this video, I want to take a look at that. I want to discuss how we got where we are without US interest rate cuts and a falling US dollar as measured by the DXY. Then I want to factor in once again an assumed drop in the DXY versus where we are today to talk about how big the next move up for both gold and silver can be. And I want to finish the video just before I get to the viewer question, of course, by saying when I expect the next move to happen. So let's jump right into this, because if we look at how both gold and silver have performed so far this year versus the last 25 years, so since 2000, you can clearly see that year-to-date performance, despite the recent pullbacks, look very positive for both gold and silver, as they are both still outperforming the S&P 500, which is up at an even 15% so far in 2024, and both gold and silver are well above the average annual increase level we've seen since 2000, shown here and here. So all in all, it has been a good year so far, especially when we factor in inflation, which both gold and silver are easily outperforming, even when we take some of the gloomier inflation calculations into account, like the one that you're seeing here that says real inflation when factoring in borrowing costs could be as high as 8% right now. Now, this fantastic performance for both gold and silver is happening despite the rising value of the US dollar relative to other currencies on the DXY index. Now, this isn't unheard of, but it is less likely to happen than when the DXY is going down, and the best way to explain why without overcomplicating things is by saying this: trust in the human-made financial system we operate in is falling. And it started with central banks during the global financial crisis, when they realized the United States could not be trusted as the caretakers of the world's reserve currency, as I've spoken about here on the channel before. And it resulted in them becoming net buyers of gold again, and that happened around 2009, 2010. But this is spreading, and it's spreading amongst normal people now, especially those outside of the United States and countries like China, where the stock market has slumped, real estate has crashed, and crypto is, for all intents and purposes, illegal for them to buy. Meaning for the citizens of China, they only have one alternative to turn to, which is precious metals, so gold and silver. And as you can see here on this chart from Statista showing the evolving Chinese gold market, it is growing in both jewelry and investment demand by 23% and 21% respectively since 2016. And we're talking about these increases spread amongst a very large population. So these are significant increases in demand for gold. So, with further debasement of currencies happening, global inflation still very high, central banks still buying gold in preparation of US money printing, as well as hedging themselves against the weaponization of the US dollar, and rising demand for silver in industry, all these factors we're seeing right now, it becomes obvious why gold and silver, despite the positive performance on the DXY in 2024, are performing as well as they are. Something, as you can see in this table, has only happened in 2 other years since 2000, those years being 2009 and 2019, and don't worry, we will dig into this data a bit deeper in a moment. But just to wrap this bit up, with US interest rate cuts being a certainty in 2024, if you believe the CME FedWatch Tool's assessment of the current situation, that means the DXY, which is currently at 104.3, is poised for a correction. Because as you can see here in this image, when the Federal Reserve cuts interest rates, it is accompanied by a drop in the US dollar because lower yields makes the US dollar a less attractive destination for investors, especially for foreign non-US investors. So, apart from trust issues, people are anticipating this drop in the US dollar, and smart people are positioning themselves ahead of it, which is something we saw in 2002, by the way, because smart money is aware of just how precious metals can become in such an environment. Now, if we switch back to the table that I was showing you a moment ago, the big highlights here for me are that since 2000, in the 12 years that the DXY was up versus the previous year, gold and silver only went up 58% of the time. That's 7 out of the 12 years for both metals. But in the years where the DXY went down, gold went up in 85% of those years, so 11 out of 13 years, and silver in 62% of those years, so 8 out of the 13 years, with more correlation to manufacturing cycles than we see for gold. And if we isolate this period of prolonged DXY decline here from 2002, when we went from the local high of 110.3 out to 2011, when we reached the local bottom of 82.7 in the wake of US money printing to fight the impact of the global financial crisis, what I want to bring to your attention is this. If we see a repeat of that over a 10-year period from now, where gold and silver put in average annual gains of 19.4% for gold and 23.8% for silver, as they did from 2002 to 2011, on the backdrop of a weakening US dollar due to more money creation, we could see gold get above $11,000 an ounce and silver above $200 an ounce by 2033. And I suspect that's a situation many central banks are not only aware of, but they are actively preparing for. Because with US national debt spiraling out of control, it's only a matter of time until the US government, with the help of the Federal Reserve, which is supposedly an independent body, but we all know that it isn't, they will have to monetize large amounts of the US debt, which means they will simply print money to pay it. And that's not going to improve the already low level of trust the average global citizen has in the US dollar-based financial system. This will undoubtedly push both central banks and regular citizens even more towards alternatives like gold, like silver, and even things like Bitcoin, love it or hate it. Because Gresham's law states, bad money chases good money out of the system. And when good money is represented by investable commodities, it means less circulating supply and higher prices for what people are willing to trade in exchange for fiat currency. And in terms of when we are going to see this happen, because I want to give you something useful and actionable in this video, just like I gave you back in December of 2023, especially for those of you who are stacking precious metals actively right now, if we expect to get a rate cut in September of this year, which is what the CME FedWatch Tool is telling us, I'd say make sure to diligently stack whatever it is you're stacking, whether it be gold or silver, before Q4 of this year, meaning the last 3 months of 2024, because if history is any indication of what can happen with metals prices and the DXY as an immediate result of rate cuts, it's that we could see the next leg up for both gold and silver as soon as October or November of this year, and maybe as late as April of next year, which means we should also be grateful for the recent price pullbacks we've seen, and we should be grateful that price isn't running away from us yet. And we need to remain conscious that at some point, big players like the Chinese central bank, even though they're on a little bit of a pause right now, they will re-enter the gold buying game. And we may need to pull back to as low as $2,200 an ounce on gold to get them back in. But from that moment on, once they re-enter, we may be missing the days of $2,300 gold. We may be missing the days or cursing ourselves for not taking advantage of $28 silver. And no, that doesn't mean go and blow all of your money on metals today. It just means if you are planning on taking a break from buying precious metals, maybe take that break at the end of the year or early next year, because I'm still stacking. And if you're wondering what it is I am stacking right now, I am mainly buying gold and silver 1 ounce maple leaf coins, and I've also been buying a little fractional gold here and there, mostly quarter ounce coins, and I'd love to know what it is that you're buying or what it is you have in your sights, because very soon I will be revealing a new business venture here on the channel, one that I'm directly involved in and one that is designed to make owning precious metals as easy and as profitable as possible for all of my viewers. And in order to prepare things that are relevant for you, I'd love for you all to tell me what products you want deals on, including fractional gold pieces, because gold shouldn't be unaffordable for anyone. Please let me know in the comments section right now, and I'll see what I can do for you. So with that said, it's now time to move on to this video's viewer question. And just as a reminder to you all, if you have a question that you want to see me answer right here in a video, please feel free to drop it in the comments section of this video or any of my videos. I am doing my best to read all the viewer comments. It's been very difficult lately since the channel is growing so quickly, but I do think that is a testament to the quality of information I'm putting out here on Bald Guy Money. But don't let that discourage you, please, because your question may be the next one to appear in one of my videos. And this week's question comes from a viewer named Brian White, the man with the plan and a longtime viewer and supporter of Bald Guy Money. I'm very happy to take your question this week, Brian. And Brian asks, do you see the US dollar being replaced by some foreign currency or by some new digital currency created by the US government? And that's a great question, because I've said it many times here on the channel. When one fiat currency dies, it is usually replaced by another. And considering what we've discussed in this video, I think it ties in nicely with the topic of trust, because I've said that people around the world are losing faith in the financial system, and a fiat currency might not satisfy them this time around. And although we will likely see the dollar dethroned at some point in the future by another fiat currency on the global trade scale, I think that private citizens are slowly moving in a totally different direction. And that is evident even when we look at the case of China. And I read this article in The Economist as I was riding on a train in Western Poland last week. And I have to say that I wasn't surprised to see that attitudes towards what it takes to succeed in China are shifting. No longer do people think it takes just hard work and education to get ahead, as they thought so in 2004. Fast forward 20 years into the future, and the Chinese are coming to the realization that so much of succeeding in life has to do with connections and family background. Now, of course, I'm not saying that these are the only factors, because I still believe that the cream rises to the top. But the fact is, how can a financial system endure when it is so obvious that the system is being worked by insiders with connections, as the Chinese are correctly becoming aware of right now? My answer is, it cannot. And because we know the Federal Reserve and the US dollar system is such a large part of what keeps power in the hands of these well-connected people, people who know what stocks to buy, people who get preferential lending rates from banks, people who know when to get out of the market or when to short it, the only way out of it is by replacing that system, not with the corrupt and manipulated system of another country's fiat currency, but to opt out of that system entirely and choose a system that is independent, that doesn't have a government entity behind it pulling the strings. And I think technology is slowly making that a reality for private citizens around the world. I think the powers that be are afraid of that reality. And it's precisely why we are seeing insane proposals like this one from the European Union suggesting that citizens should register all of their assets in some government database. These are the final desperate moves of authoritarian governments disguised as liberal saviors that maybe, in my lifetime or not, will be fully replaced by a private money system that technology is going to make possible for us. And that could be gold and silver traded digitally on the blockchain. It could be Bitcoin. And in my honest point of view, I think it will probably be a mixture of both of them, and I've prepared myself for exactly that situation. So I hope that answers your question, Brian, and with that said, that's it for this video. I want to thank everybody for watching and making this channel, I think, the fastest growing channel of all precious metals channels on YouTube. I'm very grateful for all of your support. Please remember to leave a like, subscribe, and share this content with people who you think need to see and wake up to this message. Please share this content with people like that. And until the next time we see each other, everybody, I'm wishing you a fantastic day ahead. Take care of yourselves and take care of each other. Goodbye.